Hello, and welcome. I'm excited to announce version 2 of AITPPropTrader has been released. My objective with this new version of AITPPropTrader and its accompanying suite of tools was to give traders of all walks of life, prop traders and independent traders, powerful trading tools that combine historical data, statistics, price action, price pivots or price levels, including a machine learning predictive model, and make all of it a cinch to use. My hope is that this powerful suite of tools will provide traders a lifetime of trading success. If you're a proprietary trader or an independent trader, I recommend watching this video until the very end. In it, I'll address the 12 challenges that often prevent traders from achieving success and share how you can utilize the AITPPropTrader suite of tools to effectively overcome these obstacles. If you're new to the channel, Rafi Sosikian here. I'm a commodity trading advisor. I'm licensed with the CFTC. I'm registered with the NFA, and I'm a software engineer. I'm the sole author and architect of AITPPropTrader, AI Trend Predictor, and Data Grabber. Before we begin, I wanted to share something that I read that I hope will motivate you in furthering your career as a trader. To those of you that have Twitter, I want you to check out this guy's profile. This is Nishant. He's a Bloomberg reporter. He covers specifically hedge funds. On June 1st, he wrote an article that I thought was very, very interesting. He's written several since then. But June 1st, he wrote an article where he explicitly identified how interesting it is to be a trader in today's market environment. This is the article. I believe he's posted it again. But here's the article. So now is probably the best time ever to be a trader. If you are good, and he in another tweet has posted that if you're good, meaning you have about a 10-year track record, there is a market for you no matter what the cost. My big take today. Hedge funds at war with each other, obviously, for top traders dangle $120 million payouts. Paid sabbaticals, huge signing bonuses are among tools being used as clients foot the bill in chase for steady returns. Clients are paying for these guys. So the article is, I believe all Bloomberg articles are behind the paywall. In case you don't have an account, the easiest way to read an article is just to go to archive.ph because they archive these articles. This is the paragraph that I hope will motivate traders at all walks of life, but those that are specifically aiming to do something big with their careers, with their trading careers. Well, I hope this motivates you. It's a long process, obviously. It takes 10 years to build a track record to impress a hedge fund, but check this out. The hunt is no different from the bidding war for Premier League or NBA players, one executive said. Last year, a senior portfolio manager was lured in by a major New York fund with more than $120 million in guaranteed payouts, according to a headhunter who said he'd done several deals paying north of $50 million. Contracts worth $10 million to $15 million are increasingly becoming common for traders, said another headhunter. So if you're serious about your career, doesn't matter where you start. If you start at a prop trading firm, whether you start with your own money, doesn't matter where you start. If you're serious about your career, if you do well, if you have a decent track record, something that you can then apply to various hedge funds, this is potentially what can await you. The best traders use the best tools. So how does AITPPropTrader and its accompanying suite of tools help traders overcome the 12 most common pitfalls, the 12 most common challenges that keep traders, that prevent traders from being effective long-term and on a relatively consistent basis? Well, the first issue that most traders face is an indecision on exits. Indecision on exits. A lot of traders spend a lot of time on entries, but when it comes to exits, that's where panic takes over. Okay? So let's assume that you've gotten past the whole erroneous way, in my opinion, of setting up trades where in the beginning, a lot of traders will look to have a high win rate. So they'll have a low reward, high risk environment where their stop can be something like 40 or 41 ticks and their price target will be like 8 or 10 ticks. Okay. Ultimately, they learn that the math is going to catch up with them and the account's going to get blown up. Okay. Once the account blows up, they go, okay, I figured out what the problem was. I was setting up my R ratio. I was inverting it. I was not setting it up correctly. So they say, okay, I'm going to have a higher target and a lower reward. So they can say, okay, 41 tick risk, but let's say 80 tick reward. Okay. Let's say you're trading SPOOs and you're in 10 lots, 10 contracts, and you're up $500 each. So you're up $5,000 right now in unrealized profit. The very next bar, you're celebrating. You're like, hey, this thing's running. This thing's running. We're going to get to 10,000 today. Just today, we're going to get to 10,000. And by the way, that's considered a home run day, right? Now, when it comes to home run days, I should preface this by saying they don't happen a lot, right? So let's say throughout the whole year, 230 plus days of trading, you get those, I don't know, maybe 15, 20 times, okay? But that, if you run those, if you take those, if you get those home runs, the difference could be a moderately successful trader making, let's say, 80 grand a year to someone who catches those home runs throughout the year, about 15, 20 of them, to making something like $280,000 a year. Okay, on a small account, by the way. So that's a huge difference, okay? So let's say you get that home run possibility. You're looking at $5,000. What do? You say, I'm going to let it run. Of course, my profit target was 80 ticks anyway. I still got, some room there. I'm going to get to 10 grand today, or right around. Well, the very next bar, as luck would have it, is a big, gigantic red bar because some negative news broke out somewhere, CNBC, Twitter, somewhere. You see your profits go from $5,000 in unrealized profit down to, I don't know, $1,000, $800. Let's just say $1,000. Okay? You panic. You exit. If you're in a prop trading account, you may have potentially just blown up your account. Because let's say that prop trading firm had the peak threshold at about 2,500, you're already out. Because your peak was at 5,000, you exited at 1,000. That's a $4,000 drawdown, the way they calculate it. Their high water mark is at the peak high, the peak price, and versus where you exit. So that's a $4,000 drawdown. If it's $2,500, their limit, you're done. Now, not all prop trading firms may do that, but the ones that are becoming more popular are doing that. So how does AITPPropTrader solve this problem for you? Okay. Trailing peak threshold per contract. You'll notice right off the bat, there is no checkbox here where it says turn this off. Okay? The reason for that is because I personally feel, in my opinion, it is important to use this. Okay? It's going to be helpful to you. Now, if you don't want to use it, all you have to do is instead of 400, let's say you would put 40,000. It's not going to get there on 10 lots on the SPOOs, so it's not going to go off. But if, let's say you were using, I was giving you the $500 example, so 500 per lot. I'll just put 500 for both of them. So this is trailing it at 25%. This $500 means that when it hits $500, it is now trailing the peak price at starting from $500. You could put this at 100, you could put it at 50 bucks, whatever it is that you're looking for. It's doing it per contract automatically for you. Okay? But once it hits that 500 in unrealized profit, it is now trailing the absolute peak price by 25%. So at 500, you're at 375. Right at 500, the stop it moves from, under your stop settings, if this was at risk per trade at 40, okay, it's going to move it from 40 ticks away from price, below price, to now you're in the money at 375 right off the bat. So when that red bar was coming down, it would be met with your 375 in profit stop. You'd be out, you'd be down 125 times 10, that's 1250. You still live to fight another day in the prop trading firm. Because if that prop trading firm had it at 2,500, you're still in there. Because your drawdown was 1250 and you've secured $3,750 minus slippage, minus commission on that deal. okay, on that trade. So you've done quite well for yourself because you used the trailing peak. Now, how is that different than a trailing stop? Isn't that the same thing? No. On a trailing stop, let's say you had put it at 12 ticks away from price. So every time the price moved higher, it's going to be 12 ticks away from it. That's not necessarily trailing the peak. You understand what I'm saying? So this is actually going to trail the peak price that you have, as opposed to a trailing stop, which is set. It hasn't found the peak, it's a set price. Okay? And so there is a huge difference there in the logic. So this is, I think, going to be very helpful to traders to keep their accounts active and not blow up, which happens very routinely at prop trading firms. Most accounts blow up and most people reset their accounts over and over and over again. Hopefully, using AITPPropTrader, you reduce that, or hopefully, God willing, completely eliminate it and do well. I'm going to group the next two challenges together because they're usually intertwined. The first one is trading on tilt. Okay, if you've played poker, you know what that is. And if you haven't, I'm going to explain it in a minute. And the third item, the third challenge that keeps most traders from becoming the best traders that they can possibly become, is chasing trades. Chasing trades is, I'm sure you know what that is. You get what appears to be a breakout, and you, let's say, get some green bars. It breaks out some resistance level that you had drawn on the chart, or you were looking at the chart, and as soon as you enter, it goes against you. Same on the opposite side. You see a breakdown on price. You get a nice big red bars, and you go short, and the moment you do it, reverses, and you get another bad beat, and then you get on tilt. Okay, you're now on tilt. If you play poker, you know what that is. Okay, what happens to most traders in that environment when they get that bad beat, or for example, another bad beat would be if you have a stop, let's say 40 ticks, and you're long, price comes down, takes out your stop right where your stop was, takes you out, goes down one more tick, and then goes back in the direction that you thought it was going to go. Bad beat, okay? You're going to get on tilt, most likely, okay? If you're a human being, most likely you're going to get on tilt unless you've been doing this for a long time and you've trained yourself not to. And usually that takes a decade or more to do. But once you do that, you get on tilt, you're going to want a revenge trade. If you're not using a managed system like this, where it's using managed orders, okay? It's not an ATM where the orders are unmanaged, okay? Unmanaged, you're essentially can move the stop while you're in the trade. You can move your profit target while you're in the trade. You may think that's a good thing. Don't I want to move it? Unfortunately, it's a huge faux pas when you move a stop, okay? You like to have the control over it. Like, I have control, I can move it. That's how accounts typically get blown up, okay? If you move the stop, instead of sticking to your rules, you change your rules. You had that stop initially for a reason, but you moved it. And most likely you were right the first time, okay? When you first had that stop, your gut instinct or your view, or if you did a measured move on the chart, however you picked your stop, you looked at the ranges, however you did it, chances are you were right the first time, not when you moved the stop. Chances are you were wrong. Odds are you were wrong when you moved the stop. You countered yourself there, okay? And that is going to get you to do a revenge trade. Or it's going to try to put you in the mentality that probably a majority of traders are in, break even. Okay, let me just get the break even. That stress of wanting to get the break even makes traders mess up. The other stress, not stress, but the other emotion that takes over is the revenge trade. I'm going to get you back, Mr. Market. I'm going to get my money back and then some. That is also usually a slippery slope that causes accounts to blow up. Okay, using a managed system that has money management features, which we'll talk about, risk management, trade management, which we'll talk about, various stops. One of them I already talked about, the peak, the trailing peak threshold, but it has the HL stop, the modulate break even. using a managed system like this, and moreover, a system like, for example, if you had chosen the price action price level strategy, which is new in version 2, it's got set rules. If you get out on a bad beat, right, the system takes you out on a bad beat because your stop just went off, the system is still live, the strategy is still live, it's only going to enter another trade if the setup is there. So you're supposed to trust the system as opposed to saying, you know what, I'm just going to go long again. Guess what happens? If you go long again, all of a sudden, right when you went long, maybe you make a few ticks and you feel good, you go, phew, it's going my way, comes right back down again. Okay? And a bad beat now can end up blowing up an account. Okay? Instead, using a managed system is going to solve that problem. So the next item that typically challenges most traders and keeps them from becoming the best trader that they can potentially be is not knowing where to place their stops and profit targets. Now, many traders tend to put their stops and their profit targets based on a support and a resistance line that they're looking at on their particular chart. Well, that support and resistance line may be applicable to your chart, but it's not really the support line and the resistance line that is in the market as a whole. You may be trading the 1 minute bars while somebody else is trading the 2 minute, yet another person the 5 minute, and another person the 15 minute, hourly, tick chart, volume chart, range chart, Renko bars, Heikin Ashi, and so on and so forth. You get my point that everybody's trading something else, okay? The only way to have a uniform response that where everybody is looking at the same thing, and that's to look at the price. If you look at the ranges of how the market is moving, you can guess as to what the market is going to do going forward and pick a ratio that way. So what I've done in AITPPropTrader, and this is available starting from version 2, this version, is I've made it so that you can choose optionally, you can do a static one at risk per trade, or you can choose the adaptive stop and the adaptive profit target, which is already selected here. I'll start with the stop first. So let's say the market is, in the last hour, had a range of 80 ticks. But let's make it a little bit different. Let's make it so that it had 100 ticks. You've put the ratio at half, 0.5. That means that the stop should be placed at 50 ticks. If the adaptive risk ticks meets that number, and in this case it doesn't. I deliberately chose 50 because I wanted to show you that that number here, adaptive risk ticks, means that that's the most amount of risk you're willing to take, okay? If the ratio is met, okay? Since it's the ratio met and it was 50 ticks, 40 ticks is the most you're going to take, the system is designed to automatically fail over to the default, which becomes the my risk per trade. So if you also have 40 ticks here, then no matter what, it's going to be 40 ticks because that's your max risk. You've already predefined the most amount of risk that you're going to take for that market. And of course, if you've been trading, you already know approximately how much risk you're willing to take per instrument. 40 ticks may not be a lot for NQ, but 40 ticks, in my opinion, may be a lot for ZN, for example, or ZB, okay? So, of course, I'm not recommending anything. I'm just saying my opinion for educational purposes. So, it all depends on the market that you're entering, what instrument that you're trading. So 40 ticks might be just about right for ES, okay? It may be or may not be. You have to make that decision. But if you put 40 ticks here, now let's do another example, and let's say the market range in the last hour was also 40 ticks, okay? At a 0.5, at a half ratio, that means the stop is going to be 20 ticks. And because your max stop is at 40, it will put your stop at 20 ticks. So essentially, it adapted to the market that you just entered, you just experienced. So that is very helpful in, instead of doing a blanket, I'm going to be 40 ticks no matter what, at least this gives you the opportunity to save, to reduce your risk somewhat. Anything helps, and this will help in that regard. It will potentially reduce your risk versus you saying, I'm going to always be in at 40 ticks. Well, what if the market didn't warrant it because the ranges weren't there? That day it's not trading with any significant range. Maybe you're in a choppy market or relatively choppy market. And so this would save you that trouble. Now, conversely, on the profit side, this number here for adaptive risk ticks, that's a maximum number. But on the profit side, the adaptive profit ticks is a minimum number. So the minimum that you're looking for here is 90 ticks. Let's say you put the ratio at 1. It's exactly 1. So let's say there was, in the last hour, 100 ticks in your range. And since it's 90 ticks, it'll automatically, since that's the minimum you're willing to take, it'll automatically adjust to that one ratio. So it's going to say, okay, my profit target is going to be 100 ticks, okay? Because the minimum 90 ticks was met. But what if it was only 50 ticks? So that range for the whole past hour was at 50 ticks, and you have a 1-to-1 ratio, so it's going to be 50 ticks. As opposed to the adaptive stuff, it was at half, so it would take half that range. But in this case, it's a 1, so it's going to take the full range. So if the range was 50 ticks for the last hour, but you have a minimum of 90 ticks, so what happens? It defaults again to whatever you had put for my profit target. And if you have it at 80, then it's going to default to 80. You could have this at 120. Guess what it's going to do? It'll default to 120. Okay? So you're actually saying, in that case, what you're expressing is that you feel that the next hour is going to have far more range than the previous hour did. When is that? Almost always a certainty. Not always, but almost always a certainty. If you were looking at ETH hours, the last hour in ETH will most likely have far less range than the first hour in RTH, okay? Regular trading hours. So in that case, it would make sense. So this is how AITPPropTrader can potentially reduce your risk so that you don't have a static stop always, no matter what, it's always 40 ticks or always 50 ticks, when it doesn't have to be that high. It may not have to be that high. And on the profit side, it's adapting to the market so that your profit target is more potentially in line with what the market is already experiencing, where you don't have to worry about support and resistance lines that I know everybody on YouTube has always talked about and always teaches, but unfortunately, that's something that retail is taught. On the commercial side, they're not sitting there and looking at, gee, on my 2-minute chart, that's my support line and that's my resistance line. They look at that on the weekly chart or potentially on the daily chart, but never on a short date, I don't want to say never, but almost never on the commercial side. On a short-term day trading chart, we're looking at a 1-minute or 5-minute bar or some tick bar. That's not how support resistance lines. If you have a major breakout on a weekly chart, then you can comfortably draw a support and resistance line because that would make sense, okay? Or on a daily chart. But it doesn't work very well, in my opinion, if you're doing that on a short-term chart. The next two challenges that prevent traders from becoming the best traders, the best prop traders, the best independent traders that they can possibly be, I'm going to combine them sort of together. The first one is the work-life balance, and the second one is missing out on trades. Now, the work-life balance is something that unfortunately plagues many traders because all traders at some point are taught to spend tons of time analyzing charts, market analysis, and also updating their daily journals, etc. Unfortunately, what happens is, especially when traders begin to lose, when they're winning, this doesn't happen that much. But when they begin to lose, which a majority of traders are in that camp, unfortunately, but that's why I'm trying to help with AITPPropTrader and its suite of tools, is that they'll spend Friday night, Saturday night, Sunday, at nights when they should be relaxing from their actual work. Many traders have daytime jobs or have daytime businesses and careers where, as they begin to mount up their losses, will spend less time doing the job that is the solid sort of bread and butter income opportunity that they have. They'll give that up in return for becoming the best trader that they can become. And I get the willingness, the drive. I love that. But what I want to caution people is when that happens, usually it ends up in a bad place. Not only because the actual career suffers before you get to a professional full-time day trading career, you have to transition into that, building up your track record, which is why prop trading, I think, helps a lot of people because the risk is reduced significantly there overall. But that work-life balance will eat into family time, relationship time, you time, alone time, meditation time, prayer time, all that stuff gets hurt. And that makes you typically more stressed out. And that stress, this emotional dilemma that all traders face, gets compounded. And now you're tired and sleepy and you haven't taken care of yourself. And you're thinking about your actual job or your other career or your business. You're thinking, I'm neglecting that for this. And it just starts eating you. And at some point, it all comes to a head and the account blows up. And you have to start all over again, or you have to, sort of recalibrate. Using AITPPropTrader, you don't have to pour over charts. It's already done the thinking for you. It's essentially, the rules are set. You can certainly look at after you enter a chart, after you enter a trade, you can certainly look at it and see what it did. But, it makes life a lot easier. It makes it so that when you're done for the day, you're done for the day. Okay? So that's going to free up your time and that's going to reduce your stress. And that overall is going to make you a better trader because believe me, stress management is a big part of this business. Stress management. Okay? So the other one is missed opportunities. Well, what happens? What do I mean by that? Let's say you're wanting to grab something to eat. You get up out of your chair, get in your car, you say, look, it's going to take 5 minutes. I'm going to go to In-N-Out or something, or some burger joint or something. I'm just going to get something quick. I'm going to eat at my desk. And in that 20 minutes that you're gone, or 30 minutes that you're gone, an awesome trade opportunity gets missed because you're not sitting in front of the computer at that moment. Or you have to get up to go to the restroom, whatever it is. You miss it. Those missed trades usually make people want to catch up and force a trade, get in and take a loss on that trade. Nothing needed to happen. I mean, you missed out on a trade, yes, but you didn't lose money. Okay, so that's okay. But many people will unfortunately just chase that trade, go in, which goes into the tracing of the trade that I talked about earlier. But it's all interconnected. AITPPropTrader solves that problem. Once you set it, you can walk away, though you should monitor your trades. In fact, prop trading firms may have that in their agreements. Okay, you're supposed to monitor your trades, but they understand you're a human being. You have to get up, you have to do things. This way, you don't have to miss a trade. If you've already put it into the system, it's going to take the trade. The next three items that challenge traders and keep them from becoming the best possible day traders or prop traders that they can be, I'm going to combine them sort of together. It's inconsistent money management, inconsistent trade management, and inconsistent risk management. I'm sure you've heard many people talk about these elements, but nobody really solves the problem in a way that is consistent. It's great to say you need to have good money management. How? It's good to say that you need to have good trade management. What exactly do you mean? It's good to say you need to have good risk management. But exactly how are you managing the risk when you're in the trade? Okay? How do you manage risk when it comes to market fluctuations? Okay? So I'll start with the first one, money management. So if you look here under money management, net session profit limit, net session loss limit. Okay? Let's say that let's assume you are up $1,000. Okay? You exit, you're up $1,000. Not unrealized, it's now realized. Do you want to continue? Some people will say yes, some people will say no. If you've set the rules in advance, okay, if when you exited you were up $1,000, that's more than 500 because that's a minimum number, it's 500 or more, it's going to stop looking for further trades. That decision has already been made. You've already kept yourself from going into the realm of greed, which many people go to because it's part of human nature to want more. Okay? When you allow yourself to look for trades after you hit a particular number that you have in mind and you still want more, sometimes you might be giving that money back, the original money that you made. And in other times, not only do you give it back, but you lose some too. Okay? And that, depending on where you were with the threshold in that prop trading account, may blow up, unfortunately, your account. Okay? So you set that rule in advance. This is how you manage the money consistently. Okay? And you don't have to be plagued with the woe of inconsistent money management. The same is true on the opposite side. So net session loss limit. What happens if you've set a particular number? In this case, I have as an example, $200. If you're down $200 or more upon exit of the trade, then the system stops looking for further trades. Okay? You want to live to fight another day. Sun's going to be up in the morning. Okay? The next day too. So it's a brand new day the next day. Who knows what the market brings? Who knows how you end up on that day as far as the trade goes? So why try to force everything on that given day? If it's not going your way, it's not going your way. That's okay. It happens to everybody. Okay? So you can now have consistent money management in place. So that solves the inconsistent money management problem. Next, trade management. Inconsistent trade management. There are people that I've seen will take 40, 50, 60 trades in a single day. Okay? And the reason they do that is because usually it's coming and going. If they're taking that many trades, that means they're scalping. Okay? If they're scalping, chances are that the money is coming and going. All right? When it comes and goes, let's say he's up $50 or she's up $50, she says, that's not enough. I need to keep going. And the next one, lose $100 depending on their R ratio. I have to keep going now. I'm down. Okay, so you just keep going. And the trades just, may get out of hand. Okay? To keep that consistent, you can set it not only beforehand, but you can do some basic math and know exactly what your worst case scenario may be. For example, for the maximum number of trades, you can say 5. Okay? Or let's even make that number less. Let's make it 3. And let's say you were trading, just to make the numbers easy, CL or GC, either one, because either one's $10 a tick. So let's say you're trading CL or GC. Let's go with CL. And in this example, you are setting your stop. Let's make it static. I have 15. Let's make that 10, just to make the math easy. 10 ticks. So that means you could potentially lose $100 a trade plus slippage plus commission. Okay? But if you've also put the maximum number of trades at 3, no matter what the system finds, if it gets to that third one and it takes the loss, that's it. That's the maximum number of trades. That means you could potentially lose 100 times 3, $300, plus slippage, plus commission. That's the worst case scenario that you're going to have for that day. Okay? That makes things consistent. Now I have one more feature here, consecutive loss switch. This is an interesting feature for those who want to be on the aggressive side of trades. For example, under special operations, when you choose that as a strategy right here, special operations, okay, that's an event-driven strategy. So if there is payroll numbers coming out, or if there is Fed Wednesdays, it's a rate decision, Fed Wednesday, Powell's going to be speaking. That's exactly what this strategy is supposed to do. Special operations, I've received many compliments on it. As far as I've included this in Price Action Harvester Automated as well, which is my other software, AITPPropTrader. In my opinion, by the way, I'm the author of both. They're both my babies. This one is, in my opinion, better than Price Action Harvester Automated because it's got several elements that the other one does not. This has focus for prop traders, for those who are trying to be very careful with the threshold rules, etc. And it has the AI Trend Predictor element to it. It's part of that suite. The AI Trend Predictor is part of the suite of the AITPPropTrader system. And so it's difficult for me to say one is better than the other when they're both mine. It's like they're both my kids, right? Which one do I choose? But thank God they're not my kids. They're just software. And so I can choose. I'm going to say it's this one's a little bit better, though that one's very good too. But this one's a little bit better because it's got more features. So you choose special operations. Very aggressive system designed for such events. But you don't know the direction. So you pick both. Let's say it's Fed Wednesdays. For me, it's 11 o'clock. If you're in Eastern, it's 2 o'clock. And I say between 11 and 11:15, I'm going to look for both trades, potentially both trades, long and short. So I set this consecutive loss switch to 1. Okay? And I set the maximum number of trades at 3. And let's say I keep the risk per trade at 10. So here's what happens. Let's say on the first trade, because it's very aggressive, it enters almost immediately. So 11:01, it enters, because this is the 1 minute chart that we're trading. And it goes long. That 10 ticks, however, gets taken out. Boom, out. So I lose 10 ticks, okay? It's it's 12 and a half ticks, so it's $120 plus 50 cents, slippage, commission, etc. Okay. The next trade that it's going to take, as soon as the setup is there, and this setup is very easy to meet within special operations, is going to be the opposite of that. It's going to be a short trade because I said here, I explicitly stated 1 consecutive loss switch 1. So if it loses 1, switch. It lost the long trade, it's going to switch. When the setup is there, it's going to go short. But what if it loses the short trade too? Okay, because it's in chop. Guess what? The next trade that it enters, it's going to switch again. It's going to enter, potentially if the setup is there, and it most likely will be, most likely, not always, is going to be the long trade. So it went long, lost, went short, lost, switched, and now it's going to switch to long trade again, and hopefully that one wins. Okay, depends on the setup, of course. If it's not there, if price just keeps coming down, the reason I said it's going to do that is because it was switching, right? If it goes red bar to green bar, the next one could be another red bar because we're still in chop. If it's obvious right off the bat, then it's going to go green, 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 green. Or if it's obvious right off the bat and, people were expecting 25, basis point rate hike, and he says, you know what, guys, I think inflation's run amok. We got to do 75 basis points. Yeah, the market most likely will tank, okay? And so you're going to get consistent red bars all the way down. So it all depends on how he's, what he says. So whatever he says, though, whatever he does, you could be prepared for it. And in worst case scenario, if all 3 were to lose, you're basically going to lose $12.5 times 3 times 10. That's your worst case scenario. Okay, you defined it in advance as opposed to worrying, stressing out. Is it going to work? Should I re-enter again? Should I change my stop? You don't have to worry about any of that stuff. You have to plan it out in advance and let the system handle it. So that's how AITPPropTrader is solving the inconsistent trade management issue. Okay? Now, inconsistent risk management. So when it comes to stops, people tend to move them, particularly if they're trading manually or they're trading via a system that is using an unmanaged system via an ATM strategy, for example. Most of those are going to be unmanaged. Okay, that means you can move your stop as you please. All right. Using the in AITPPropTrader, you have several different ways of deploying a stop and trying to secure as much as possible unrealized profits. One, we already discussed, it's the very impressive trailing peak threshold feature. That's the first way. The second way is HL stop. This is a high-low stop. So this means if you're in a long trade, it is going to trail the price off of the higher low bar. Okay, the highest low bar as it's moving up. Let's say it's staring up. All right, it's the staircase up on a long trade. The higher low is what it's trailing. It's going to put the stop 10 ticks in this example, 10 ticks below the higher low price, whatever that higher low price is, 10 ticks below it. But it also must ensure, in this example here, that your minimum unrealized profit must be actually 10 ticks at least. So if your unrealized profit wasn't going to be at least 10 ticks when it moves it 10 ticks below that higher low price, it isn't going to do it. Okay? And the opposite is also true if you're in a short trade. The lower high price is what it's trailing. Okay? So it's going to put it above the lower high price because you're in a short trade. That's another way that you can manage the risk. Yet another way is modulate break-even. It's the same break-even that I'm sure you know. The break-even plus X means that, obviously the X means that you're ensuring that you're at break-even plus at least 2 ticks of profit is where it's going to move it to, exactly to plus 2 ticks of profit. And if you've selected this, check adverse price, it's only going to deploy the modulate break-even if price has moved against your trade. Okay? So using money management, trade management, risk management consistently has a high likelihood, in my opinion, of making traders succeed over the long haul and become more consistent over the long haul. It's not always true. Sometimes you use all of those tools and it still doesn't work, okay? Because your entries were bad, or perhaps you were ignoring days when it comes to that, because that's an important element also, choosing the right day for the right instrument. And you can easily figure that out by running back tests and seeing what days works better on which instruments. Okay, it's not a good idea, in my opinion, to trade the same instrument every single day and assume that every single day that instrument trades the same way. That, in my opinion, is not the best way of doing things. Okay? So that's how AITPPropTrader will solve those 3 issues: inconsistent money management, inconsistent trade management, and inconsistent risk management, making it consistent. So the 10th challenge that plagues traders or prevents them from becoming the best day traders that they can possibly become is ineffective simultaneous trade management. Okay? What if you wanted to trade or were looking for trade setups for multiple instruments? ES, CL, GC, SI, HG, you name it. What if you were interested in looking for any of those instruments to be the actual trade that you want to be in, and you end up entering from those 4 or 5 instruments 2 of them or 3 of them concurrently, simultaneously? To do that via a system that is using an unmanaged order system via an ATM strategy, or doing that manually, becomes a very laborious and I would say risky task, because the odds of you managing 3 trades at the same time well is very difficult. Okay? Something's going to give. If price moves quickly on one of them, chances are your focus is going to go to that one and you're going to skip the other 2. Okay? So obviously using a trade that is using a managed system like AITP prop trader, using a trading system, I should say, that's using a managed order system like AITP Prop Trader is going to solve that problem for you. So this one's kind of short, but just using the system solves the problem of traders that are looking to enter potentially several different trades on several different instruments concurrently. And the final two items that keep traders from becoming the best possible prop traders or day traders or independent traders that they can be is essentially not knowing which direction to choose, whether long or short. And the other side of it is not knowing which instrument to trade. Okay? AITP Prop Trader can solve that for you a couple of different ways. One is the obvious. You plug in various instruments and you can concurrently run a backtest on multiple instruments at the same time by simply making an instrument list in NinjaTrader. And I have several instrument lists that I've made. In this list I have four various instruments here in AITP for Friday. In this particular list right here, I have 4 different instruments. You can have 20 instruments, 15 instruments, depending on what you're interested in trading, and run a backtest and see what does well. Run the backtest on both long and short for all those instruments, and within a few minutes, NinjaTrader will tell you, let's say you run the backtest for the last 6 months or something, it'll tell you based on the various parameters that you use for risk, for reward, for money management, etc., which instruments did well. That's sort of an interesting way, of course, of looking at it. But there's yet even another, potentially even more interesting way of looking at it, and that is this very terminal that I've kept up here most of this video is the AI Trend Predictor. Okay, this is a standalone software. It's written in Python. I wrote it in Python, and it uses a powerful machine learning library in there where you are to feed the machine the machine learning library with data, and it will take that data, crunch it up, and tell you via prediction what it's possibly going to do in the next 24 hours. And I have yet another library in AI Trend Predictor, a second library, that's a powerful statistical library that will take the prediction that AI Trend Predictor makes, which the prediction is going to be on the left side of your terminal, and essentially it also prints out the prediction in an output.txt file and puts it on your computer, but most people tend to enjoy just looking at it on the terminal here, like so. And it'll tell you what the statistical probability was, meaning how often the prediction was right if you go back in time. So if you run 6 months of data and grab that data using another tool that I have that I mentioned at the beginning of this video, the data grabber, which is part of the AI Trend Predictor, the AITP Prop Trader suite. If you use the data grabber, grab the data for, let's say, the last 6 months, it'll go back and let's say it said up here, right, at 0 hour. Forget that one. Let's just do somewhere around the open. So 7 a.m., that's open for me, RTH open, 7 a.m. Pacific Standard Time. It basically is predicting that it's going to be up up, and it's saying here on the right side 60% of the time. So it took that up direction, this AI Trend Predictor software did, it took it and it ran it across all 6 months, the last 6 months that you put in. And it ran it at the 7 o'clock hour to see how often that prediction was correct going back in time. So the first thing AI Trend Predictor did is it made a prediction. Totally exclusive prediction. It has nothing to do with any statistics. Okay? It's just grabbing the data from data grabber, and it's basically got the prices, the open, the high, the low, and the close price, and the volume. Just on those elements, it is making a prediction. Okay? But then we're grabbing those predictions, running back 6 months, and seeing how often it was right. Okay? So in this case, it's saying it's right 60% of the time, which in my other videos I've noted on my YouTube channel that that is actually the minimum. You want to look for the minimum threshold of 60%. That's how I view it anyway. You don't have to do it that way. Some clients are just looking at the actual prediction, okay? And because they're not really going to just go long and that's it. Basically what they're looking for is saying, okay, well, this is the hour that it's saying go long. So they set up their trade via the under choose strategy. They'll choose the AI trend predictor option, which is the AI trend predictor based. You choose that, you uncheck the other ones, and then once you do that, you're going to set up the trade, and you can say, okay, if it says 7 a.m. up, then I'm going to put 7 a.m. to, let's say, 7:15 a.m. or 7:30 a.m. up, and then they hedge their bets. How do they do that? They'll say between 7:31 and 8 a.m. go short. So if it said go long between 7 and 7:30, then they're going to go potentially short, or they're going to set the system to look for short trades between 7:31 and 8 a.m. Okay, just so that they hedge their bets, meaning the first one's wrong, the second one could be right, and of course they have to also do what we just discussed, which is trade management. So they have to say, okay, if you take, for example, 2 losses in a row on the long side, then you're switching to the short side anyway. Okay, and they sort of force that by only choosing the short side. So let me give you an example as to exactly how that's going to work. So let's say AI trend predictor said between 7 and 8 o'clock, that hour it's going to go up. So they cut it in half. They say, okay, the first half hour I'm going for long because it said it's going to go up, and then, long. And then the second part of that, I'm going to go short. Okay? And then they'll say, they've already chosen AI trend predictor based for the strategy. They can keep the HL follow if they want to, but they're going to say under money management, they're going to say, for example, take a maximum of 3 trades, 2 in each direction. So in this case, if it takes, let's say it's 7 o'clock, it enters a trade, but by 7:02 it's out, it takes the 10 tick loss. I believe I still have it at 10 ticks. Yeah, 10 ticks. It's going to attempt one more time in the long direction, okay? If it takes that second one and that one wins, great. But if it loses, then it takes that stop, then the third trade that it's going to look for is only going to be short. So let's say it was 7:10 a.m. and it still had an opportunity to take another long trade, it would not, okay? It would wait until 7:31, 8 o'clock, and it would enter a short trade, okay? So basically using AI trend predictor, you can now know which direction you're going to go, because that's the first problem. But we haven't even discussed which instrument. You don't know which instrument. Let's say you just wanted to trade one instrument. You only have so much money to take risk with, and you're going to take it on just one instrument. Well, how are we going to know? Here's how you solve that problem. Okay, so here's Data Grabber. All you have to do is pick the instruments. So let's say I'm going to pick this one that I have that has a lot in it. Let's do this one. Okay, select all. This is 6B, 6E, CL, ES, GC, HE, NQ, RTY, SI, YM, ZB, ZN. Select all. Okay, I'm going to run it from January 1st until June 23rd. Okay, and you don't have to change anything else except this. Value has to be 60 because we're running these on the hourly. Okay, so put the value at 60, or we're not on the hourly, but we're running it for 1 hour. Okay, so put 60 for that. And let's say I wanted to pick Tuesday. I'm going to pick Tuesday. That's all I need to do. Once I hit run, Data Grabber is going to go out and grab all of the data from all of those 12 instruments. It's doing it right now. Okay? Within a few more seconds, it's going to be done. And we're done. Okay? You're going to see that. That's normal because it's not actually running a back test. All it's doing is it's sort of doing some acrobatics with the strategy analyzer within NinjaTrader, and it's using the strategy analyzer to essentially in the back end run the data. It just went through all of the charts for all 12 instruments, grabbed all of the data that it's looking for, the open, the high, the low, and the close, and the volume. And where did it write it? It wrote it right here. This is the AI Trend Predictor by Pinnacle Quant folder that once you get this system, it's going to automatically create for you once you get it. So this folder is going to get created, and look at that. All of the instruments that we just talked about are right here, okay? They're right there. So you can just grab it and you run it. So it also has the dates, it has the time. Notice the file name has the instrument, it has the expiration date of the instrument, and it has the date and the time, okay, including the seconds. So you don't ever have to delete a file here. You can just let it grow. And it's just going to get bigger and bigger the more you run it. And you really have to run it once a day if you're going to be using it. And once you do it, that's it. Once you run it, then the next day you have to run it again. You can once in a while go in and literally just highlight everybody and delete it if you want to. Right click, delete, and it's gone. Okay? But you don't even have to do that. You can just keep it here. Then you're just going to grab the file. So let me just grab it here. I'll just grab this one right here. Okay, because I'm just demoing it. So I'm going to click rename. I'm going to control C this. And I'm going to demo this really quickly for you guys. This is how fast it is. You just paste it in there. Okay, sometimes people look at the terminal and they go, oh, I can't do terminal. My goodness, this is I've never seen this before. Don't worry, it's really, really easy to use. Okay, you don't have to be like a Linux programmer, a PHP guy, a Python guy, nothing. Okay, it's very easy. Look what I'm going to do. I'm going to hit enter. And done. It's that easy. Okay, it just has the predictions right there, so you don't have to worry about it. All I did is I grabbed it and I copied it and I pasted it into the terminal. That's it. And it's going to print out the results for me. It also wrote it to the output.txt file, which is rendering computer, but you don't need that. You know, if you're a software developer yourself, you may need that. Okay, some software developers might use this. Because to create this is a lot of work. To do Python, they don't want to do that. They'd rather work just directly with NinjaTrader, which is going to be a lot easier. This is outside of NinjaTrader. And so basically with this information, they can then write a script and grab the data from the output.txt file and do something with that data programmatically. Okay, but you don't need to do that because you're using AITPPropTrader to essentially just grab this information, know what it is, and then you can put it into AITPPropTrader and it's going to trade it for you. So this is the final element of the 12 issues that typically plague traders and keep them from becoming the best that they can possibly become. But there's still one more thing I'm going to show. I'm going to run a back test for you, a hypothetical back test, so that you can see how the system actually works and the type of results that it has in the next screen here. So now that we've gone through the 12 most challenging issues that typically traders face that hinders them from becoming the best possible traders that they can become, and how AITPPropTrader and its suite of tools solve those issues, let's go and run a hypothetical back just so you get an idea of what we're talking about here. So I'm going to run it for Friday, and I'm going to run it for essentially the entire RTH hours minus the first 30 minutes. I'm in Pacific Standard Time, and the last 30 minutes because I do have my flatten everything time enabled here. So excuse me, not there, here, flatten everything at 12:59. And so that's, again, Pacific Standard Time. So let's go and select the 4 instruments that I had in mind here for Friday. They are CL, ES, GC, and HG. Excuse me, ladies and gentlemen, I am losing my voice a little bit here. So I'm going to go ahead and run this, and then I'll quickly discuss the parameters. It shouldn't take too long. If it takes too long, I'll add some music to this, okay, so it would be more agreeable and more entertaining for you. But let's see. So as far as the parameters, like I said, I'm running it pretty much all day. I've chosen for strategy. It's grayed out, but I hope you can tell, but I'll read it anyway just in case you can't. I've chosen the price action price level strategy. And I'm using HL follow stop as we had discussed. I'm not using modulate break even. For money management, these are the parameters I'm using. 3,000 for net session profit limit, 500 for net session loss limit, 10 maximum number of trades, 3 consecutive loss switch. So it switches on 3 consecutive losses. I'm of course using profit target and stop, but I'm particularly using the adaptive profit target and the adaptive stop, and those are the perimeters. I am of course using the trailing peak threshold. I'm exiting at 12:59, and I'm running this for this entire year, starting from January 1st until, well, 12/31/2023 incorporates today, which is June 24th, so it includes today. And I have 1 tick of slippage, which is enough for the 4 instruments that I'm running. If I was running NQ, I would put in 2 ticks of slippage. If I was running Bitcoin futures, I would put in 7 ticks of slippage, because you want to essentially add the slippage based on what you see on the chart, what the typical slippage is, okay? Of course, if you have a chart with like 15 indicators that's constantly running, you're going to have more slippage than normal, but on my charts, it's bare bones. I do not put any indicators there. So those are the hypothetical results for those instruments, CL, ES, GC, and HG. This is just for Fridays, so we're missing 80% of the rest of this year, okay, because we're just running it for Fridays, okay? So just for Fridays, there should have been, what is it, 6 months, so about 24, 25, something like that, Fridays so far this year. So 106 trades total. We have CL, ES, GC, and HG, copper, gold, SPOOs, even the S&P 500 futures, and CL, crude oil. Please note that Sortino ratio, Sharpe ratio, they're going to be incorrect. It's actually going to be higher than that because, likely going to be higher than that because we're missing Thursday, Wednesday, Tuesday, and Monday. And the way NinjaTrader calculates it is they do it by the month. So we're missing 80% of the month. And so, because we're missing Thursday, Wednesday, Tuesday, and Monday, so we're missing 80% of the month. So those numbers are going to be less. So we have to do a cumulative. We have to run, Thursday through Monday as well, and then add them all together. But as far as the results, the hypothetical results, I should say these are it. I really don't have much more to share in this video other than to say if you need more information, if you would like to have a demo, another demo, I'd be happy to do that. Just submit that request online at pinnaclequant.com and we can schedule a demo and I can do another demo for you. Or if you're ready to place an order, we have 2 options that you can choose from. You can do a yearly option or a lifetime option. It's up to you. This concludes this video. If you've made it this far, thank you. Congratulations to you for your patience. I hope you've enjoyed this video. I hope it's been helpful to you. And if it has, please like it and share it. Subscribe if you haven't already, and please click on that notification bell so that when I release future videos, you're notified immediately. Until next time, take care of yourselves and God bless.